Welcome to the Trading Lounge and the Day Ahead Report, and here we're looking at the US 30, the Dow Jones on a daily chart, and just wanted to point out here that we do have a positive market. The only little bearish connotation that can come into it is that we've got this move down through here in a five wave structure through here. So we've got an impulse wave here, so it's likely that this is a corrective wave moving up through here. So we can get a move back down here as a C wave, so an A and a B and a C wave, and once that's completed there, then we should see a move to the upside here as such. The turning point in here, I was looking at the employment figures, the non-farm figures coming out tonight. The ADP figures on Wednesday were positive, so we expect them to be positive today. So I'm not sure tonight. So I'm not sure what the catalyst will be for this turning point here. But just drilling into that a little bit further through here, this is what it looks like here in terms of the Elliott count. We have this high over here. And we have 1, 2, 3, 4, 5 down through here as the calling it an A wave, and then we've had this 3-wave counter trend up here, so we know that that's corrective. We know that that was impulsive, so that means we should get another 5 down after correction. We know that this is in corrective here, we had it labeled as an A and a B and a C, but once we got this A, B and a C through here, once we've got to move up to here, then it makes that corrective as well. So we have to call that a B wave, and we'll be looking at this to have the C wave coming in through here. So it's not quite finished yet. We should see a little push up through there, but I haven't actually pulled all of this apart through here at the moment, but if you've got time, that should be 5 waves within there somewhere. Well, I think that's the top of the third there actually, and it'll one to go in through here. So I'm not sure what the catalyst will be to turn this market, because the non-farm figures should be positive. Anyway, we'll see what comes out of that. So look, an A wave, a B wave, and then a C wave down through here. Now the C wave should look something like this 5-wave structure through here, and that should come down. Well, if it stays below the 600, then we should just tip in through here and get an equal bottom here as a ABC flat correction from that point, then move up from there. However, if it just continues to climb up through here, then then I've missed something. So just a little bit confused here at the moment, but the good news is that we don't see this as the top of a big bear market rally as such. At this point here, we see this as an A wave, a B wave, and a C wave down to this point. So we're still bullish in here, which will help us on the Australian market a lot as well. Of course, if this moves down through here, then we can expect a correction at the 4,500 mark on the ASX there. So just looking at the S&P 500, before I do that, I'll just have a look at this is still the Dow here. So I'm thinking this is the top of a 3rd wave here, and this would be a 4th wave and a 5th wave through to here. Just looking at the S&P 500 as well, it's the same pattern as well, slightly different here. The S&P 500 never made a high above this previous one here where the Dow Jones did, so we've just labeled that as wave 5 here as a truncated 5th wave. But it also could be counted as from here as an A and a B and a C wave to this point here, and then we're working higher through here. So I know that there is resistance at the 65, this is all group 2 here, 65, 72 and the 80. So essentially, if this price comes up and moves above this high here, then we can have a more positive structure in. Otherwise, we would need to take this one out here to have the next degree higher positive as well. So there's resistance at 65 and 68 through here, so just be aware of that, which could certainly finish the C wave here, and then this little C wave, and then we'd see another 5 waves coming down through to here, which can come down to the 1420 area there. It may not get that far because of the nice support that we've got in there on the top of subgroup 1, the 1430. The other thing is that it is trading above the 1450, which makes us in terms of trading makes us positive. Elliott's one thing, but using price to trade is the second step in the process, and certainly being above the 1450 here, it creates the longs. And finding support on here, it had one small retest in here, which is fine, but it would need a larger retest in through here. So it's either going to move back down through here. On the more positive side, though, if it finds support on the 1472, then we'll be definitely going straight up from there, and then we would be looking at this, counting this as a wave 1 to here at least, and wave 2, then another wave 1 and a wave 2, then we'll be pushing up much higher. So support on the 14 will either fail at the 65, 68, or we'll find support on the 72. So there is just a little window of risk in there, so just be careful about that, and let's see how we travel with that. The European markets, the FTSE is a little bit stronger than the DAX in terms that it started to develop support above its group 1, which is the 10, the 20 and the 30 there. It's got some support there. I would imagine that's going to be retested again through there, so allow that to happen. Any long trades will be created on the midpoint here, the 58.50, so look for support on that. There is risk in here at the moment, so just be very careful about entering in through here. The DAX hasn't managed really to get up on its 30 up here, on its 73, but 10, 20 and 30, it hasn't managed to get support up there, so that's in a weaker situation. And there was positive news coming out of Europe, but on the employment figures, but it hasn't moved here. So I see more selling sort of pressure here. And also remember as well, like the Dow Jones, we've got this impulse wave coming down through here in 5 wave. So we have to view this as a corrective pattern through here. The trigger to short though would be, well, a retest of 7300 on the as resistance would be 1, and adding to positions or a safer trade would be using the 272 here as a retested resistance through here, and looking at a 5 wave structure moving to the downside. So we would see something like the 1 down to here, the 2, the 3, the 4 and the 5 testing back into the 72 area through here. The Australian market is positive, you can see in this daily trend through here. So yeah, look, everything's pretty rosy here as we've sort of been expecting it to be. So the 4500 is the next target up through here. So the idea is to count 5 waves up through here. And if we drill into that a little bit further through here, we can see that in this next degree here, we know that we got wave 1 here and wave 2 here because we counted the 5 little waves up through here, and then we've got the 61.8 retracement level through here, and then we've got this positive 3rd wave up through here. I haven't had time this morning to pull all this apart through here, but I'm just assuming that we're going to be looking for a top of a 3rd wave up through here. But just drilling in here a little bit further, because we'd been really focused on the 44.50 here, the midpoint gleaning support over the last few days here, and it's sort of really struggled to sort of get up there, and now it's facing subgroup 2 area here. So you know that the 72, if the 72 becomes the support there, then you can add new longs from that position there. With Friday as well, if we get a stronger closing on the Friday, we need stronger volume to support that price action as well. But if that's the case, then we should see some follow through for that. But be very aware of that resistance on the S&P 500 at 1465, 1468 during today, and also those non-farm pay figures, non-farm payroll figures as well. So yeah, that would be the catalyst for moving that. But yeah, look, what I can see here is that this has been in this trend just through here. We've had a powerful move through here, and it's been rather sluggish through here. So we can't expect it to race off in any sort of speed here. But what we can expect is that we do have good support on subgroup 1, which is the 44.30, and it is developing on the 50 there, but it's very sluggish, so I'll be a bit concerned about that. So we really need to be mindful of, from the 72 there, testing back into this trend line through here before we see any move to the upside from that. So just just be mindful of that. But support on the 72 would take us to the upside, and we're looking for, as these were like waves 1 and 2, and this would be also wave 1s and 2s in here. This is the beginning, the middle's in here, and we're looking at the ending pattern coming in through there. Alrighty, well, let's have a look at the commodities. Okay, starting with oil through here, we're still in our E wave to the downside. We've had this strong move down here through yesterday, and we've had a strong move up back up last night. I feel that 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 this whole leg is not complete just yet, but it has thrown a bit of a spanner in the works. So if we just drill in here a little bit closer in here, we can see this strong move up through here, and it does appear to be developing into an impulse wave. So what an impulse wave will do, once it's completed, it's a 5-wave structure, then it'll have an ABC correction and then further to the upside. So if we drill into this little section here a little bit more into here, we can see that we've got a series of waves 1s and 2s in through here, and then we've got the third wave in through here. So we've got the beginning of the trend here, we've got the middle of the trend here, and now we'll be looking at the end of the trend. Now the end of the trend will be very much like this structure through here. Okay, so as these were waves 1s and 2s in here, these are going to be waves 3s and 4s into here. So it will slow down into higher ground. Of course, it'll edge a little bit higher into the 93 here. It could certainly come back into 91 first, and then basically sort of edge higher. So we could actually just grab that picture there, reverse that, and tack it on to the end here, and that's what we'd be looking at through there. So I just want to see how this develops before we start reworking the wave count within this particular degree of structure. Because we wanted to see the S&P 500. If it fails at that 1468 area, if that's the case, then oil will follow stock, and we'll see it move down, and we can look at this as an ABC correction to the upside. So I just want to see how it develops before we label it, but in the meantime it will follow the S&P 500. The copper market is, well, there's no change really, it's just doing its thing. This wave 4 here as well, very much like the euro and gold and so forth. Gold is edging higher, so it does give a bit of support for this being a wave 4 here, low here. I mean, it did pull back to the 38.2 retracement level, so that's fine. But with wave 4s, they're just tricky little suckers. So this can hit down through, can be the A wave, the B wave back up, and the C wave down into here as such, and put that wave 4 over here before we see that push up through there. So that's a real possibility, and especially if the S&P 500 struggles at that 1465, 1468, then that's possible as well. So just need to give this a little bit more time here. But in the interim here, it's working across the 380 here, which is of course the old highs over here. So yeah, we'll see how that goes. If it's going to move down, well, then it will move down like this. We'll have to treat this as the A, the B, and the 5 waves in here for the C wave, and this here would be down for 1 and back for 2 here. And I don't think that's the case, but let's just see how we go. So we could say that if it took these current lows out through here, then we would see down for 1, back for 2, down for 3, 4, and 5 down to here, back down to these old 38, 367 area through here, and then push up from there. But otherwise, if it pushes up through here, then and take this high out here, then it's going to give us a larger impulse wave to the upside, and we'll continue moving up from there, and then we'll look for support. But even if it did move up through there, it's not going to go very far from where it is at the moment, because all we would see is the first high above the level somewhere like this, and then we would see the A wave here, the B wave across here as such, and the C wave across here, and then we'd see it push up from that point there. So there's we're not going to miss anything. So, but the main point of all this has been that the price staying above the 367 there, which would give support to the materials sector, and that's exactly what it's doing. So all's good there. The the gold market here is same pattern as the copper that we just looked at, and it is a bullish pattern to the upside, and these are all series of waves, ones and twos, and this is the third wave up through here. So the third wave up here in brackets here for the one and the two, it hasn't really finished yet, so we could put the small third, fourth and fifth wave in here somewhere, and then that would be the top of the third wave in brackets up here, and then we'd see an A and a B and a C for the fourth wave, and then further to the upside. So what we're going to see is we're going to see a corrective pattern across the 1800 here. Simple as that. And the first thing that we look for is a classic pattern. So the trading levels classic pattern. So we've got the arrival, the reaction, the first high above the level, then the A, the B, and the C, and then finding support on the level. And once it's at that point, then we look for long trades pushing up higher. Yeah, so all's good there really. All right, let's have a look at the currencies as the US dollar index got sold off at the trading level 880. Okay, starting with the US dollar index here. Finally, it's been sold off at the 80, that's good news. And the move coming down through here is not quite an impulse wave yet, but it certainly has got the personality of one. So we would be looking for lower ground in here as wave 5 making new lows through here. But let's just drill in there and have a closer look at what's occurring. So this is the pattern so far from the high. And the important thing here to note is that, well, two things really, is that the move down through here so far is in 3 waves. So what we need to see is we need to see that in 5 waves. That will be an impulse wave. But I can say that normally when you're having a correction, the A wave will be the sharpest and the C wave will be the laziest. But in this case we've got the C wave here being the sharpest, so that's got the personality of a third wave in that particular case. The other thing that we need to look for as well is the retracement level through here, which is where it currently is now, and this will be the same at the 61.8. This is the same for the euro as well. In fact, the euro is a little bit closer to its 61.8 retracement level, so we can expect some support through there. But in looking at this little pattern coming down through here in more detail, we can see that it's really sort of gunning it to the downside here. So it's really got the personality of a third wave coming down through here. So we can expect more from this, but as mentioned before, in a trend there's a beginning, there's a middle and an end, and this is the beginning, this is the middle, and then there will be the ending part which will slow down, which is normally like the beginning. So yes, bearing that in mind. But that does obviously give stronger prices to commodities, as we've seen in gold and copper holding up as nice. So good for the materials sector. Also for the euro as well, the wave 4 that we were looking at. If I just find the bigger picture here, so just bear with me here, a little bit unorganized on my laptop when we're traveling for the Melbourne Expo today. So okay, here we go. So we've got this we've had this wave 4 pulling back through here and pulling back to the 38.2 retracement level, so everything's sort of rosy then. The only thing that we're looking for here really is that in the wave 4 it can be more complex. So this move that's come down through here could just be the A wave, then a B wave back up, and then a C wave across here. That's highly possible. So we'll just keep that in mind. This move up through here, just as we counted the US dollar index to the downside in a possible only 3 waves so far, but possibly 5 waves developing. So that's what we need to keep an eye on. So when we look at this structure here from its low here, we can count this as either up for 1 or we can also put that there for an A wave as well, and the same with this for wave 2, and also the B wave through to here, and also the same here as well for wave 3 here. So you know, we just need to be a bit mindful of this. So it could be a corrective pattern to the upside, and also here you'll see the 61.8 retracement level, which is right in at its high here at the moment. So that would be the 61 retracement level from here. So you know, it's only natural for it to move up. So normally when it moves through here, the distance it goes above will be the distance it comes back and below here. So we would see the price working across the 130 there, and the 130 is important too in terms of the bigger picture as well, because 130 is a minor level, but it's also the top of minor group 1. So 1.1, 1.2 and 1.3. So finding and developing support on 130 here really gives the market a lot of strength to the upside, and essentially, you know, a good support on 130 here, we would be looking for a move much higher into the 140 area. So I'll just have that larger picture back here for a moment. Not sure where I did with it. Okay, we can just look at this while we're here for the moment. If we put this horizontal line at 130 there, and we've got this, what we're looking for here is we're looking for 5 waves up through to here, then an ABC correction back across the 130 here, okay, and then another move up through to here. So this area in here, if I can just zoom in through here a little bit, so this would be our wave 4 here. So what we'd be looking for eventually, once the wave 4 is finished, is we're looking for 5 waves up through there to complete that top of that there, and then we would get from that, and the ABC correction would be an A wave to here, then a B wave back up, and a C wave here to make this section through here, then a move up. So it's going to be quite a while before this develops as a really good support and a long trade up through here. So we just need to go through some stormy weather here first, and the correction that it builds in this area here will be the foundation for that next move up there, which would be about the same length as as whatever this move is here. So there'll be some sort of equality within that stretch section there. So it'll be a good longer term trade to the upside, but it's not ready just yet. The Australian market, we were looking for a bounce off the 102 area. That's finally come in. The bounce we were looking for was for wave 4, coming back 38.2%, which is really where the orange line is there, the 102.72 area through here, and that's pegged it quite nicely. So we should see this move down through here into wave 5 now. But what concerns us about this move down through here is the fact that the S&P 500 is moving to the upside. So once again, that 1465, 1468 on the S&P 500 failing there to start its C wave down is important. And if that is the case, then we will see this move to the downside through here. If we drill into this a little bit more closely here, all I can say really is that we've got our ABC correction through here. If at some stage support is found on the 102.72, and you know that this particular number is very important, the 272 or 772 is more important than just a normal 72. So if support is found on through here, then we'll just naturally go long from that point there, no matter what the case is. So see how this sort of develops. But as you can see down through here as well, in this block here, there's a lot of support here as well. So it's not a really good time to go short in here. I'll just sort of stand aside and maybe look at some of the crosses instead. Alrighty, well that just about covers it. So yes, the S&P 500 current highs, finding resistance there and as a possible turning point is what we're sort of looking at, but fundamentally we can't see that sort of happening because of the non-farm figures coming out, which should be positive, but if they're not, then that will be the catalyst for that turn. So we just need to be mindful, and we just need to get past that little juncture there, and once we're past that, we can either go long or we can go short for that. The other point is that for the Australian market, if we have a stronger closing today with a stronger volume supporting that price action, then that will give us the momentum and the support to carry on from the Monday. But once again, that S&P 500 will have some bearing on the situation. But also with the US dollar index moving to the downside, which is going to, commodities are traded in US dollars, so that will obviously give us some support within for the Australian market as well. So that support on the 44.50 with the US dollar index being down will be a solid ground for further upside. Alrighty, well, good morning and good luck, and hope to see a few people at the Melbourne Expo. Okay, cheers.